Michael, welcome back. Great to have you. Before we get to some of those individual trades, does China's supply color your overall view of the sector right now?
It does on the short term, but on the long term, I don't think it does. I mean, these issues are going to get resolved, or China's going to move things out of China towards Vietnam and other places. So I think it's a short-term impact, as you can see by the chart on your screen. You are in a situation where tech is going to be affected by what's happening in China, and certainly global tech.
So lead me to naming Apple and Amazon and Disney as some longer-term plays. Walk through a few of those and explain why that works.
Sure. I think what was just said. There was a 40-day wait. There's a 33-day wait. A 33-day wait for an iPhone, and I just think that there's demand is still going to be there. Eventually, what's going to happen is Apple's going to catch up somehow, and the demand is going to be there. Amazon, I think, has great cloud services business, and I think is going to have an incredible holiday. And then Disney, of course, everyone knows what's happening with Disney right now. The reason I included it in terms of tech, because a big part of Disney now is Disney Plus. The content that they're paying for is just pretty incredible, and I think cost controls are going to come under Bob Iger. I was talking to one of my analysts, Ryan, about this, and he said that he thought that Disney would be a stock that eventually is going to get through this sort of CEO morass that they have and actually start moving towards getting back on business.
Michael, I want to go back to the Chinese investment story. The K-Web is up 5% today, nearly 30% this month. And I wonder, do you think that is because of or despite the unrest? Is there a case to be made that the investment story is actually stronger because of this pressure on Xi Jinping and his leadership? They're not going to have a choice but to relax that zero COVID policy.
It's hard to say. It's hard to say. I'd be really surprised if they actually did, by the way, reduce the controls they put in place. It's funny because I'm not sure how I got these things, but I have lots of contacts in China, and they're sending me these pictures out of their apartment windows of all of these protests everywhere. So, I think you're going to see a continued shift out of China towards other countries, whether it's Korea or Thailand or Vietnam. I think you're going to continue to see that shift. I think Apple will adapt to what's happening on the ground.
Right. So sort of the story is unrest, it's uncertainty, unpredictability of the leadership, yet these Chinese stocks are on a tear. And you've really seen foreign investors start to buy in over the last few weeks as well. Help us try to understand this, or maybe we can't.
Well, I'll give you a perfect example. You've had a number of Chinese technology stocks, some owned by some very famous investors, that have had issues. Alibaba would be an example of a Chinese stock that's had issues. It certainly has been showing some sign of life in terms of the overall health of the market. But look at where that stock is compared to where it was. I mean, we get excited when something goes up 5%, and we forget about when it went down 50%. So that's the dangers of headlines, right? Because if you focus just on the short term, you'll have the wrong impression of really what's happening. And in our view, China is going to continue to have problems. China is going to continue to have challenges in their economy, not because just of COVID, but just because of the change in tone from the leadership. President Xi is very focused on philosophy. He's less focused on money. And that's just been obvious in terms of the regulation they're putting in place. So, yes, China stocks have rally opportunity, but I'd be very careful because I think China really has some structural issues in its economy right now.